Hello, and thanks for joining us. Welcome to our special coverage, where we break down the most important company earnings of the season and explain what they mean for you. I'm Becky Quick, and I'll be your guide as we explore the highs and lows of this exciting week in business and finance. Today is November 10th, 2025, a big day on Wall Street, as many major companies are set to reveal how much money they made over the last quarter. Think of these earnings reports as a business report card. They show us which companies are excelling, which are falling behind, and how their performance stacks up against expectations. Investors and analysts pay close attention to these numbers, using them to decide where to invest their money. Stock prices can swing wildly in response, sometimes within minutes of a report being released. This week, we're putting the spotlight on three fascinating companies. CoreWeave, a fast-growing AI technology firm that's making waves in the tech world. Paramount, a legendary entertainment company that's working hard to stage a comeback in a rapidly changing industry. And Occidentalpetroleum, a major oil giant now facing new challenges as the energy landscape evolves. Each of their stories reveals something unique about today's business world: what's working, what's not, and where the future might be headed for different industries. Don't worry if you're new to investing or business news. We'll keep things simple, clear, and easy to follow, so you can understand the big picture and the details. By the end of this series, you'll see why artificial intelligence is such a game changer, and why some companies are thriving while others are struggling to keep up. So, let's dive into the world of company earnings together and discover what this week's news means for all of us: investors, workers, and anyone interested in the future of business. Get ready for a fast-paced, insightful journey through the latest business trends. Let's get started. Before we jump into the world of companies and investing, let's break down what earnings really means and why it matters so much to investors. Imagine you're running a lemonade stand. At the end of the day, you count all the money you made from selling lemonade. This is your revenue. But you also need to subtract what you spent on lemons, sugar, cups, and maybe even a sign. These are your costs or expenses. What's left after you pay for everything is your profit, your earnings. This is the money you actually get to keep, and it's the most important number for any business. Big companies do the exact same thing, just with much bigger numbers and a lot more complexity. They track every dollar coming in and going out to figure out their true earnings. Earnings show if a company is actually making money after all expenses are paid. It's a key indicator of whether a business is successful or struggling. Investors often look at something called earnings per share, or EPS. This is simply the company's profit divided by the number of shares that exist. It helps investors compare companies of different sizes. For example, if your lemonade stand had 10 shares and made $40 profit, that's $4 EPS. It's a simple way to see how much profit each share earns. But remember, high revenue doesn't always mean high earnings. Costs can eat up profits quickly. Managing expenses is just as important as making sales. A company can sell a lot, but still lose money if expenses are too high. That's why just looking at sales numbers isn't enough. That's why earnings are considered the real measure of a company's health and long-term potential. They show if a business is truly sustainable. Strong, growing earnings usually mean a well-run business and often lead to a rising stock price, which is great news for investors. That's why investors watch these numbers closely, using them to spot companies that could be winners in the future. Now, let's see how this plays out in the real world, and why understanding earnings can help you make smarter investment decisions. Our first company is CoreWeave, a rising star in artificial intelligence that's quickly capturing the attention of the tech world. CoreWeave owns thousands of powerful computers, GPUs, and rents them to tech giants like Google and Meta, as well as to dozens of fast-growing startups that need massive computing power. Think of them as the engine room powering the AI revolution, quietly running behind the scenes to keep the world's most advanced AI models up and running. This week, CoreWeave reported revenue of $1.36 billion, up an astonishing 134% from last year, a sign of just how fast the AI industry is expanding. That's explosive growth, showing just how much demand there is for AI computing. Companies everywhere are scrambling to get access to the hardware CoreWeave provides. Even though CoreWeave isn't profitable yet, its losses are shrinking fast as it invests in more computer centers and expands its reach to new markets. Last year's loss was $360 million. This year it's down to $110 million. A dramatic improvement that's catching the eye of industry watchers. Investors are excited because the company is moving closer to profitability, and they see huge potential for future growth as AI adoption accelerates. CoreWeave is betting big on the future of AI, and so far, it's paying off, with the company becoming a key player in the global tech landscape. The company is at the center of the AI boom, providing the tools and infrastructure that everyone wants, from startups to the world's largest corporations. It's like being the only water seller in a desert. Everyone comes to you when resources are scarce, and CoreWeave is in the perfect position to meet that demand. That's why CoreWeave is one of the most watched companies on Wall Street, with analysts and investors tracking its every move. Let's take a closer look at what's driving their remarkable success and why CoreWeave is shaping the future of artificial intelligence. CoreWeave's secret: massive deals with the biggest names in tech. It recently signed a $6.5 billion contract with OpenAI and a 6-year deal with Meta, worth up to $14.2 billion. These long-term agreements guarantee steady revenue for years. CoreWeave's future contracts total $55.6 billion. Money already promised by customers. That's why investors are confident in its growth. But after the earnings report, the stock dipped slightly. Sometimes even great news isn't enough when expectations are sky high. Coreweavestock is up 170% this year, so some investors may be taking profits or worrying about the company's big spending plans. Still, as long as the AI boom continues, CoreWeave is in a prime spot. It's like owning all the shovels during a gold rush. Everyone needs what you're selling. That's why CoreWeave is powering the technology that's changing our world. Now, let's head to Hollywood for a different kind of comeback. Next up is Paramount, the legendary studio behind Mission Impossible and Nickelodeon. Paramount struggled as viewers ditched cable for streaming, but this year, it merged with Skydance to form Paramount Skydance. New CEO David Ellison has a bold turnaround plan. The company's first earnings report impressed investors. Stock jumped 6%. Paramount is cutting costs, aiming to save $3 billion, including tough job cuts. Investors like the focus on efficiency and profitability. The real goal: make blockbuster movies and hit TV shows that people want to watch everywhere. With Skydance's creative power, Paramount is betting on content to drive its comeback. The merger gives the company fresh energy and new leadership. Investors are optimistic that this classic brand can thrive again. Paramount's story is about reinvention in a fast-changing industry. Let's see how streaming fits into their strategy. Here's how they're winning over viewers. Paramount's streaming service, Paramount Plus, is now the centerpiece of its strategy. Subscriber numbers are up to 79.1 million worldwide, and streaming revenue jumped 17% from last year. The company says Paramount Plus will turn profitable in 2025, a huge milestone. To get there, they're raising prices in key markets next year. Higher prices may sting, but good content keeps subscribers loyal. Paramount is cutting costs in its old business while growing its streaming arm. Investors are cheering the clear path to profits and the company's willingness to adapt. Paramount proves even old giants can evolve and win in the digital age. It's a lesson in survival and smart change. Now let's look at a company facing tougher times. Here's what's happening in the energy world. Our last company is Occidental Petroleum, or OXY, an oil and gas heavyweight. This quarter, profits fell to 65 cents per share, down from 98 cents last year. Even though results beat expectations, the stock slipped. Investors want growth, not just stability. Oil prices are unpredictable, making profits hard to sustain. Warren Buffett's Berkshire Hathaway owns 27% of Occidental, but even his backing couldn't stop the stock dip. The company's future depends on global energy prices and the shift toward cleaner energy. Occidental is investing in carbon capture, but oil remains its core business. The lower profit is a reminder. Even giants face big challenges in a changing world. Investors are watching to see how Occidental adapts. The energy sector's future is uncertain, and innovation is key. Now let's zoom out and see the bigger picture. How is AI changing everything? Looking at CoreWeave, Paramount, and Occidental shows us the big trends shaping today's economy. The biggest force? Artificial intelligence. CoreWeave's explosive growth is proof. Every major company wants AI, and it's driving profits across industries. This isn't just a tech story. AI is transforming everything from entertainment to retail. Even Paramount uses AI for special effects and personalized streaming recommendations. Companies that embrace AI are pulling ahead, while others risk falling behind. This earnings season, 82% of big companies beat expectations. AI is a major reason why. The AI revolution is just starting, and it's changing how we work, live, and invest. Understanding AI is now essential for investors and businesses alike. The lesson: adapt to new technology or get left behind. Let's wrap up with the key takeaways from this week. What did we learn from this week's earnings? First, AI is creating huge winners. CoreWeave is the perfect example. Second, old companies can reinvent themselves. Paramount's comeback shows the power of bold change. Third, some industries face tough headwinds. Occidental struggles highlight the risks in energy. The big message: technology, especially AI, is the main driver of growth and change. Companies that adapt and innovate are winning. Those that don't fall behind. For investors, watching these trends is key to making smart decisions. This week was a tale of explosive growth, smart reinvention, and tough challenges. The future belongs to those who embrace change. Thanks for joining me. See you next earnings season. Stay curious and keep learning about the world of business. Until next time.